All right, let's dive right in, shall we? You've given us a really interesting set of information about Star Cement Ltd. We've got excerpts, I guess you could call them, from their Q2 FY25 financial report, their investor presentation, and then this set of pretty insightful questions here that somebody wants answered.
It's like a detective's file, isn't it?
Yeah, it really is.
We have the raw data and the company's kind of official story, and then these questions that are kind of poking around, looking for the truth behind it all.
Exactly. And it feels like you want to go deeper than just the typical headlines, right? You want to really understand what's driving Star Cement this quarter. So for everyone listening, let's just get a picture of Star Cement. They're a big player in the cement industry, working mostly in eastern India, especially the Northeast.
Yeah, and they've built up a really strong brand recognition in that region. And, they seem to be pretty invested in giving back to the community, which is something we can talk about maybe a little bit later.
Yeah, good point. And their report tells us they sold 962,000 tons of cement. That's a 7.3% jump from last year. But here's where it gets a little interesting. Sales in the Northeast are booming, up 11.5%. But outside that core region, sales actually dropped 5.1%.
Yeah, that's a pretty big difference. It makes you wonder if it's a conscious decision, like a shift in focus, or is it maybe a sign that they're running into some trouble in those traditional markets?
Okay, so let's dig into the financials. They're unaudited, by the way, just so everybody knows. These are for Q2 FY25. They were approved by the board back on November 8th, 2024. And we should mention this is the consolidated performance.
The whole group.
The whole Star Cement Group, yeah, which
Yeah.
includes 6 subsidiary companies.
Right. So it's not just one company, it's this whole network.
Exactly. So looking at the key figures, their revenue from cement and clinker sales hit INR 642 crore.
Yeah.
For those who maybe aren't familiar with the term, clinker is a key ingredient in making cement. And that revenue figure represents a very healthy 10% increase compared to last year at this time.
Yeah, revenue growth is usually a good sign, but it's just one piece of the puzzle, right? You need to figure out what's actually driving it. Is it just because they're selling more cement in the Northeast, or did they raise their prices?
And here's where that puzzle gets a little more complicated, I think. Their EBITDA, that's earnings before interest, taxes, depreciation, and amortization, which is one way to measure operating profitability, came in at INR 97 crore. That's actually a 7% dip compared to last year.
Okay, so that's our first little warning sign, right? That maybe things aren't quite as rosy as they seem. Revenue is up, but earnings are down, which usually means that costs are increasing faster than sales.
And that warning sign turns into a full-blown siren when you look at their profit. Profit before tax absolutely plummeted to INR 8 crore. That is an 88% drop from last year. That kind of a drop would make any investor pretty nervous, right?
Yeah.
It suggests there are some deeper issues that they need to be addressing. Profit after tax followed a similar trend, down 86%.
Right, this is the mystery, right? This is the question you're probably trying to answer. Why the big hit to profitability even though revenue is going up? So let's see if we can find any clues in the investor presentation.
They do mention increased logistics costs. They say it's because of a higher portion of sales from the Northeast and non-trade segments. Not exactly sure what those are, but it sounds like basically their transportation expenses are going up.
Makes you wonder, is this all part of some master plan to dominate the Northeast market, even if it means higher shipping costs? Or are they being forced into that region because they're facing challenges somewhere else?
And then there's the whole global energy situation. Like
Mhm.
power and fuel costs are up, which is obviously impacting them as well.
Yeah, it's like you're trying to bake a cake and the price of flour and eggs suddenly skyrockets. You're still selling cakes, but your profit margin shrinks, right? But it looks like Star Cement isn't just going to sit back and take it. They're installing a new 12-megawatt waste heat recovery system, and that's coming online in Q3 of FY25, and they're also putting in an alternate fuel and raw material processing unit.
Yeah, these are projects designed to help them reduce those energy costs,
Yeah.
which could be a big deal in the long run. It's like putting solar panels on your bakery, right? It's an investment, but it can save you money over time. But the question is, will those savings be enough to really overcome all these challenges they're facing right now?
Right. We need to kind of compare those potential savings to their current losses and see if the strategy aligns with what we know about long-term energy trends.
Okay, now let's talk market share. Star Cement is very proudly calling themselves the largest manufacturer in Northeast India, which, makes sense given their focus on that region. But where do they stand against the competition in the broader Indian market?
Right, that's the million-dollar question. Are they actually growing their slice of the pie, or are they losing ground? And how are they positioning themselves in this whole competitive landscape? The investor presentation is going to highlight the positives, right? But we need to look deeper to see the whole picture.
Good point. And they've also been busy with these expansion plans. They've won bids for 6 limestone blocks in Rajasthan. That's a lot of limestone. An estimated 63.9 million tons. Seems like they're setting the stage for some serious growth here.
Yeah, they're not messing around. They want to reach a production capacity of 12 million tons per annum by FY27. That's a huge jump from where they are now.
They're really going for it.
Hmm.
But how are they financing all this? The report mentions increased borrowings, which, makes sense given how much they're trying to do. But is that level of debt sustainable in the long run?
That's another piece of the puzzle, right? Rapid expansion can be risky. It's like building a bigger bakery before you even know if you can sell enough cakes to cover the costs.
So before we get into all those juicy questions you sent, let's just shift gears for a second and look beyond just the numbers, right? The investor presentation talks about how committed they are to environmental responsibility.
Yeah, they talk about green energy and reducing their carbon footprint and being a responsible miner. It sounds pretty impressive.
It does. But what's the reality there? Are they just saying all the right things, or are they actually walking the walk?
That's what we need to figure out. Are they just jumping on this sustainability bandwagon, or are they really committed to making a difference?
Okay, so let's grab our magnifying glass and take a closer look at some of these claims. We'll see if there's any substance behind all those nice words. Okay, so we've kind of laid out the overall picture, right? They're growing, but they're facing some headwinds, especially when it comes to that profit picture. Now, let's get into those questions that you sent in, because these really get to the heart of, I think, what's going on here.
Yeah, they're like little laser beams cutting through the surface and focusing on the really critical things that maybe aren't obvious at first glance.
The first one here is about that revenue growth, right? Sales are up, but is that the whole story? I mean, was it all about volume, or were there price increases too? And did those big sales in the Northeast make up for that dip we saw elsewhere?
Yeah, to answer that, we'd need to break down their revenue by region and product type, and we don't have that level of detail in these materials.
Right.
But we can make some educated guesses, right? The investor presentation doesn't mention any price increases, so it's possible that most of that revenue growth came from just selling more cement.
Yeah, makes sense, especially with that big push in the Northeast, right?
Yeah.
They're really trying to, own that market, it seems.
Yeah, and that region is seeing a lot of economic development, so that's probably driving up demand for construction materials like cement. So they might be really smart to focus there.
Okay, so volume seems to be a big part of the story there.
Yeah.
And the next question, and this is the one that everyone's kind of biting their nails about, is what's causing that profit drop, that huge profit drop. We've talked about energy costs, logistics, but what else could be going on?
Well, the investor presentation mentions those increased logistics costs, right? Partly because of the higher sales in the Northeast, but also because of something they call non-trade segments.
Non-trade segments.
Yeah, it's not clear exactly what that means, but it could be like, direct sales to big infrastructure projects or maybe government contracts, which might have different pricing, than their regular sales channel.
Oh, so they might be selling more cement but making less profit on each sale, especially those non-trade sales.
Exactly. And those higher transportation costs to the Northeast, that cuts into their profit too.
So it's kind of like a perfect storm, right? They're selling more but making less on each sale, and then they've got these rising costs. It's a tough spot to be in.
Yeah, no doubt. And, they mentioned those investments in the waste heat recovery system and that alternate fuel project to try and get a handle on the energy costs.
Right. Do you think that'll be enough?
Well, it's a good step. It shows they're trying, right? But those projects take time to build and to start generating those savings.
Yeah. It's not like you flip a switch and suddenly everything's cheaper.
Right. And even when they're fully operational, will it be enough to really offset all the pressure on their profits? And what if energy prices keep going up,
Okay, so let's switch gears again. What about competition? The investor presentation says they're the top dog in Northeast India. But how do they stack up in the whole Indian cement market?
Well, we don't have the market share numbers for the whole country in these sources, but just because you're the biggest in one region doesn't mean you're dominating everywhere, right? It's
Right.
like, you might be the best bakery in a small town, but how do you compare to those big national chains?
Yeah, are they swimming with the sharks yet, or are they still in the kiddie pool?
Exactly. That's the question. We'd need more data to really answer that, Look at their market share over time, see how they're doing against their competitors across different regions.
Okay, now speaking of competition, those expansion plans, right? 6 limestone blocks in Rajasthan, 63.9 million tons.
Hmm.
They're really laying the groundwork for some major growth here.
Oh, yeah, they're thinking big. Remember, they want to hit 12 million tons per annum capacity by FY27. That's a huge increase.
It's a cement empire in the making.
Mm.
But let's get back to the financing, right? More debt to fuel this expansion. Is that really sustainable?
It's risky, right? It could pay off big time if it all works out, but if those bets don't pan out or if interest rates start going up, they could be in trouble.
So it's all about, careful planning and a little bit of luck too, I guess.
Definitely. There are always things that are outside their control, right? The market can change, the economy can shift.
Speaking of things outside their control,
Yeah.
let's talk about those challenging climate conditions they mentioned, right? Affecting their logistics in Q2. How big of a risk is that for them?
Well, the Northeast, as we know, is known for its challenging terrain, and unpredictable weather that can really impact transportation. So if they're relying heavily on road transport, especially in a region that's prone to like landslides and floods, then yeah, they're exposed to a higher level of risk for sure.
So it's like trying to deliver cakes in a hurricane.
Yeah, you can have the best cakes in the world, but if you can't get them to your customers, it doesn't matter, right?
Right.
So the question is, what are they doing to manage this risk? Do they have other transportation options, backup plans if the weather goes crazy?
Like, are they building tougher trucks?
Well, maybe not tougher trucks, but maybe they're looking at different routes, diversifying how they transport things, or maybe partnering with local logistics companies who know how to handle those tough conditions.
Makes sense. And beyond the weather, what other challenges could they be facing? Could things like, raw material prices changing or maybe government regulations, could those things throw them off course?
Oh, absolutely. Those are definitely things they need to be thinking about. The cost of raw materials, things like limestone, coal, those can fluctuate a lot. That can impact their profits. And, government policies, especially around environmental stuff or infrastructure, those could change. And that could have a big impact on how they operate.
So it's like they're trying to bake a cake,
Yeah.
but they're juggling a dozen eggs at the same time, and then someone keeps changing the recipe.
Yeah, it adds another layer of complexity, right?
Right. Okay. Let's move on to their sustainability initiatives. I mean, they're aiming pretty high here, right?
Yeah, they are. They're talking about green energy and reducing their carbon footprint and being responsible miners. It all sounds very impressive.
It does. But what's the reality here? Are they just trying to sound good, or are they actually making a difference?
That's what we have to figure out, right? Let's take a closer look at what they're saying and see if it holds up.
All right, so let's get out that magnifying glass and see what's really going on.
Right.
Let's take a closer look at those sustainability claims. They're saying they want to hit 55% green energy by FY26. What does that actually mean when we're talking about making cement?
Well, it probably refers to their energy mix, right? So they're likely trying to use more renewable sources like solar or wind power and rely less on fossil fuels. And the thermal substitution rate they mentioned, that plays into this too. Basically means swapping out those traditional fuels like coal for alternatives, things like biomass or maybe industrial waste.
So less smoke and mirrors and more like sunshine and windmills.
Exactly. And that goal of reaching net zero carbon footprint by 2050, that's a pretty ambitious target, especially for an industry like cement, which, is known for producing a lot of emissions.
Yeah, it's like saying you're going to bake a cake, but you're not going to use any ovens or electricity.
Right. It's going to take some real innovation to get there.
Yeah.
They'll probably need a bunch of different strategies, everything from making their manufacturing processes more efficient to maybe even investing in things like carbon capture technology.
Okay. And they mentioned that 4-star rating for responsible mining at their Cub mines. Does that really hold any weight?
It's a good sign, right? It suggests that they're at least making an effort to reduce their environmental impact and be more careful about where they get their raw materials. But, like with any rating system, you got to understand what those ratings actually mean. Like, what are they measuring?
Right. Are they really changing things, or are they just good at filling out paperwork?
Exactly. So to really know if their sustainability efforts are making a difference, we need to go beyond just the rating.
Right.
Look at what they're actually doing. How much have they reduced their emissions? How are they handling their waste? Things like that.
So it's one thing to say you're baking the healthiest cake in the world,
Yeah,
but then you don't want to share the recipe or let anyone see your kitchen.
exactly. Transparency is key when it comes to all this.
Yeah, makes sense.
Yeah.
Okay, and we also talked about those community engagement initiatives, right? The health camps, education programs, all that. It seems like they're really trying to get involved in those communities where they work, not just, throwing money at the problem.
Yeah, I think that kind of approach can be really valuable.
Hmm.
It helps build trust with the community,
Right.
and it can help prevent conflicts and ensure that their operations are actually benefiting the people who live nearby.
So it's kind of like baking cakes for the whole neighborhood and sharing the recipe with everyone.
Exactly. It builds a sense of community, right?
Yeah.
But, again, we need to look deeper. What are the long-term effects of these programs? Are they really sustainable, or are they just a temporary fix?
And then there's their whole marketing strategy. They've like Mirabai Chanu and Rian Parag and a bunch of other big-name athletes all promoting their brand. Pretty smart move, I think, tapping into that local pride.
Yeah, it's a classic strategy. You get these famous people to endorse your product,
Yeah.
right? And people start associating your brand with those positive feelings. And I think it works especially well here because Star Cement is so focused on that specific region, right? These
Mhm.
athletes are like heroes in their community, so their endorsement really means something.
It's like getting the best baker in town to recommend your cakes. Everyone's going to want to try them.
Exactly. But at the end of the day, the taste of the cake still matters.
Right.
The marketing might get people to buy it once, but the quality of the product is what's going to keep them coming back for more.
So to sum it all up, it seems like Star Cement's got a lot going for them, right? They're growing, they've got these ambitious plans, and they're trying to do things the right way, both for their business and for the world. But they've also got their work cut out for them. There are some real challenges ahead.
It's a bit like they're trying to bake a cake while riding a roller coaster.
Yeah.
It's exciting, but you got to be really careful not to spill the batter, right?
So listener, as you follow along with Star Cement's journey, here are a few things to keep an eye on. Those profit margins, are they going to improve? Will those investments in energy efficiency actually pay off? Are they really walking the walk when it comes to sustainability? And can they keep growing without getting tricked up by all those risks?
And most importantly, don't be fooled by the frosting, right? Look at the whole cake before you take a bite.
This has been a really interesting look at Star Cement. Hopefully you found it helpful and maybe learned a thing or two. And remember, the best investors are always curious, always asking questions. Thanks for joining us.